when we get very overbought, that typically tends to be both the top in the move in volatility, but also the bottom in the stock market. So we're getting to a very oversold condition in the markets. We're getting to a very overbought condition in the volatility index. This typically coincides with a reversal in the index itself. Here's what you need to know before the bell this morning. We have been talking about just the last couple of weeks that volatility was very, very suppressed and that we were likely going to get an uptick in volatility. And again, because of September being particularly a weak month for the markets, wouldn't be surprising to see an uptick in volatility, weaker prices in September. In fact, we just wrote an article on this just a couple of weeks ago on the website. We've seen that. We've seen a very nice uptick in the volatility index coinciding with this recent sell-off in the markets. Importantly, though, going back and again, as with everything, and again, just like with oil prices, so beware of the headlines, right? This time is different. It's not different. Volatility index is now back to very, very overbought levels, just as we've seen in previous movements in the volatility index. Every time we have these moves like this, the volatility index gets very overbought. And when we get very overbought, that typically tends to be both the top in the move in volatility, but also the bottom in the stock market. So we're getting to a very oversold condition in the markets. We're getting to a very overbought condition in the volatility index. This typically coincides with a reversal in the index itself. So again, we've had a lot of selling pressure over the last week in particular. And again, as we've been saying, is that there's a lot of headlines getting thrown out there about the market. This is pretty much quarter-end rebalancing issues. And again, you have about 20-25% of all the big fund managers have their fiscal year end in September. Now, in December, we're going to have about 30% of fund managers all have their fiscal year end. So again, this is why in December, we have another sell-off in the first couple of weeks of December as they do their year-end distribution. So again, that's a lot of this that's going on right now. Again, volatility has risen, but it still remains fairly low from a historical perspective, but there's no real driver or catalyst at this moment to talk about having another type spike like we had back in March during the bank crisis. So again, we're probably to the limits of this current move in the volatility index, probably near a bottom. And if you take a look at sentiment indicators in particular, they're getting pretty negative here as well. So again, as is always the case in the markets, when markets are correcting, nobody wants to buy anything, right? It's like, oh my gosh, markets are going down. This is terrible. They're just going to keep going down. But this is when you get the best opportunities to put money to work in the markets. Again, we always want to do what feels the worst generally. You want to sell when markets are extremely overbought. You want to buy when they're very oversold. You have those environments occur on a regular basis, yet we do exactly the opposite. We tend to buy stocks that are overbought, sell stocks that are oversold. So again, it's just a bit of navigation here in the markets, but there's a lot of signals here that suggest that we're likely near the bottom of this current correction. The same thing goes in the bond market as well, but on a more extreme basis. But we're getting to that point that likely we're about to see a move in the other direction for these markets. Doesn't mean permanently, right? We're not talking about the next great bull market. We're talking about maybe a couple of months where you have decent price action in the markets and some opportunity to make some money. That's what you need to know before the bell this morning.